haven't really grown up around dogs, but we got one from my wife. They know they got a good body clock. They know when it's dinner time for sure. So, yeah, Black Lab, 7 years old, still very, very energetic. Alrighty, so let's kind of get into this. Thanks, guys, for tuning in. The other thing that we're gonna do is I put together an outline like this, and I think we're going to be able to get to you in the email in case you guys want to have this just for notes. But this is basically what I'm going to do. This is what the path I'm going to follow as far as what I'm going to be talking about. So we're doing it a little bit differently. I don't have a whole lot of slides to get everything up and running like this because that just takes a ton of work. But I am going to go through all the live charts. So we're going to go through live charts. We're going to answer Q&A at the end. We're going to be collecting your questions. So feel free to ask questions at any point, and the team will be collecting it, and I will be seeing that at the end, and then we can get into that and answer all those questions and all that. So yeah, then we can kind of get into some live charts at the end. I definitely want to get the bulk of this done in an hour to make sure we're respectful to anybody's time. And if we want to stick around a little bit longer, we can kind of talk for a few minutes afterward and get that going. So yeah, obviously this market has just been up and down. I think we've been seeing that, especially today. There was a nice big puke at the end of the day, and then then we had a huge short covering rally for the last 11 days. So yeah, all over the place. A couple of things that we'll be getting into, as I said, reading the sentiment, bullish or bearish, which we're going to be talking about a lot of that. And then I'll be touching on a lot of commodities, since we are seeing a lot of oil and metals and that kind of situation going on here. And then, basically, I know a lot of people have been talking about the China stocks and just bottom fishing in general. And, there are some, dare I say, the ARK funds and what's going on with them. And they still have a lot of names on their roster that are just still going straight down. So careful about bottom fishing. And then we'll kind of get into, I don't know if anybody's ever heard about the Great Reset. Maybe you should go look into that and kind of see what's going on with that and where we can go in the future. So a little bit about me. These are some of the things that I've been on. I'm director of stocks at Simpler Trading, and a little bit about how I got here. I'm sure some of you have probably heard this before. But basically, I got into stock trading when I was old enough to sit on my dad's lap, and he was looking at charts and having me ask if I knew if it was going up or down or what the trend is and all that kind of stuff. And then he took me to my first stock trading seminar when I was 12, and I didn't know it at the time, but actually something really important came from that. And I asked, well, is this really possible to learn how to do this? Can we make money from this? And the guy said, well, yeah, none of us knew how to trade. Like, we weren't born knowing how to trade, duh. So what that meant is you can learn this, and if you can learn it, you can teach it. And if you can teach it, you can learn it. And so that's really where I got all this, and I kind of stuck with that, and I thought, okay, it's possible. And so here I am on the other side trying to convey the things that I know to anybody else who's interested in hearing them. And then just, for me, I'm very mechanically oriented. I'm a pilot. I like to race cars, work on our airplanes. In fact, we just pulled the engine off of that airplane for the second time. There's metal in it, so we need to figure out what's going on with it. But the engineering side and the checklists and this discipline of being a pilot, this all really kind of goes into factoring of my trading style and how I try to convey things to you guys as traders. A little bit more about the airplane. In fact, we just maybe a few months ago, we finished upgrading. So we now have a dual glass cockpit instead of all these old steam gauge. So pretty cool. And then, I think that's an old one. Oh, that's why this is old, because we were just getting into the extras on that point. So what I will say is, obviously, I do have a trading room. So if you guys are interested in checking that out, we're going to send you links. You guys can kind of find that stuff. And then also I have classes if you're interested. And then the other thing is, for anybody who's new, we did do, I think it's a $45 or $49 30-day trial. So if you guys are interested, we can get you what do you want to do in order to find access to me. So totally anything's out there. This isn't about going crazy. We're not trying to sell you anything. We're just it's a market update. If you like what I have to say, there are ways to find out more information and how to come in and learn from us. And that's what we do. All right. So obviously, UVXY is up here. We're going to be talking about that. But what I first want to talk and start with is PayPal. And the reason I want to be talking about this, and I'll get a bigger screenshot on here, getting down to the weekly, the daily, and the hourly, is basically don't catch a falling knife. And what that means is price can always go lower than you think. And I know that even when this whole thing was starting about the market starting to roll over, you know, we were kind of programmed to buy the dip, buy the dip, or look for the bounce, or all these things are going to scream the other way, and it's going to get so oversold. Or that's the concept. If it's oversold, it's going to bounce, and oversold, it's going to snap back the other way. That is not always the case, and we have been seeing some crazy moves out there, and just kind of almost unprecedented moves about how quickly this has happened with the market still being up. I mean, you see moves like this, but the indexes are still up, and in fact there are still bull markets in certain areas, commodities, oil, and all that kind of stuff. We are seeing quite the bifurcated market out there. It's really pretty crazy what's going on out there, and I've been talking to a lot of seasoned traders who've been around longer than me, and they're like, yeah, normally when the market rolls over, it all rolls over, or maybe there are a few things that kind of hold up, like the blue chips. It's like, no, this is totally different. We are seeing all sorts of crazy stuff. So just want to show you, even on the weekly chart, even through my eyes and the things that I use to tell me when things are oversold, we've been seeing them go even lower. And this one was actually fairly clear right here on the daily chart, when you could see price run right smack into the daily 50 and then continue down with the Moxie indicator below zero. And so that was as I said, fairly easy to see that was not going to go up, because just clearly look at how strongly the moving average was in a downtrend. That's not to say that we haven't been seeing other things. Like, let me just show you SGMS. And again, guys, this is a fairly casual, informal presentation we're going to be doing, kind of like just being real, talking to you guys what's going on out there. How about this? SGMS. Like, why hasn't this gone lower? It's crazy to see that something like this has maybe hung out, but it's got almost nothing holding it up, and it's like, okay, why is this thing still holding up compared to, say, PayPal? It went down, and some other names that have been down. So we're in a very strange market, and it's trying to figure out names that are actually going to fall apart, like PayPal, versus names like SGMS that are surprisingly still hanging up. And I will even say, if we look here at the monthly chart, something like SGMS I think, should be careening down lower, because we're starting to see it actually get rejected by the underside of the monthly 10. And so, yeah, I look at something like this, I'm like, wow, what is going on that some of these things are doing just fine apparently and others are not? So then we can look at Square. Just want to kind of show you this thing. Same thing. I know a lot of people love Square. In fact, I was talking to my my hairstylist a few months ago, and he's like, well, it's cheap, let's go buy it. And I swear it was like right about here that he bought it, and I just like, ooh, well, I hope you're going to hang on to it, and hopefully it comes back. And we have no idea. We don't know if these things are going to actually come back. Sometimes when they get knocked down like this, they can take a very long time to come back, and it could be a whole different crop that actually comes back. David, actually, you read my mind. Yeah, I'm going to be talking about a couple uranium stocks. Maybe you saw that on the list, my notes that I had. So Square. Oh, and then here, let's throw that on for anybody else who's actually in the class right now. Got the camera on there so you guys can check that out. If you don't like it, you can move it around. You can make it bigger, smaller, so it's not in your way. And then another one, Path. And it had earnings. I mean, look at this thing, just straight down. It never once actually caught an uptrend. Like, little bounces, but those were just oversold bounces. You could see that price basically got too oversold and bounced a little bit, too oversold, bounce a little bit, but it has been in a very solid, steady downtrend. And if I'm not mistaken, this is the number 11 holding of ARK. So, um, sometimes your conviction can get in the way, I think. So this is why we're technical traders, and we try to pay attention to actually what's going on out there. And we've just been seeing things just absolutely get demolished. And so be on the correct side of the trade. As I said earlier, it's funny to see that things like this are screaming downward, but then some other names are just actually holding up when they should be going down too. So it's a bifurcated market. Just trade what's working for you, and if it's not, then do what you can to salvage. Zoom, we're seeing a bit of a bounce, but it's a little bit hard to know at this point if it's going to be a bounce like this and here. Where are we at this? Which is it actually going to be a legitimate bounce? The other thing that I will say, get that worked out, is that if let's just say, in fact, this really is the low, it's working on the low, it's never going to go below $100 again, and it's going to start working its way up. Let's just theorize that. There's still a lot of work that has to be done before this thing is actually in an uptrend. Sure, price can go higher, and I could easily see that if it bounced, it could go up to the weekly 21, which would be, maybe $175. So it could go all the way up here, and I still wouldn't consider it in an uptrend, because this weekly chart with that 8 below the 21 is so bearish. It's going to take a lot of work in order to actually change those moving averages, to narrow those moving averages, and then to bring those moving averages on top of each other. So just keep that in mind when you're trading something, that you've got a lot of work before it can actually ever start doing something like that. And it can just do this for a long time too. In fact, since I'm thinking about it, strange, thinking about it, not thinking about it, Playboy, I mean, something like this. You look at this and say, wow, that's really oversold. And, how much lower can it go? It can go lower. First off, it can go lower. And you think about, well, if there's going to be a snapback, well, it didn't go anywhere. I mean, think about what this has been doing for the last several months. It's just kind of been going nowhere. And so this is what I want to express to you, and just make sure that you're not in something that's going to be dragging you down. And maybe this has just been doing a bear flag into the daily 50 before it goes lower. So keep that in mind. Roku, just example after example after example of names that just could not get anywhere, and they've come all the way back to where they begun. Roku, you can see here on the weekly chart, had a massive double top, and that was it. In fact, you can see the negative Moxie indicator right there, and the Moxie indicator was below 0 this whole time, so that made the 50 resistance the whole way. The only thing that I will say to, yes, maybe this is the bottom and maybe it's going to bounce, is that, yeah, we do have the Moxie indicator now reaching 0, going positive on the daily chart. But again, I'm going to only consider this a bounce, and then there's probably going to be a pullback, and then we'll have to see if there's support and if price actually wants to start going up from there. So just remember that even if you did catch the absolute low, like say like last week was the absolute low, sure, it's still going to take a lot of work before it really actually starts trending and probably starts heading to 250 or something like that. So just remember, it can go up, and then it can go down, and then go up again, and it's going to take some work. Okay, and then if we talk about, say, BABA, Baidu, FXI, just remember what's going on with China. Part of the reason why all these Chinese stocks in the first place were going down is because basically threats of being delisted. China didn't want the U.S. Regulators, officials, to know what was going on inside of companies and inside of their companies. They didn't want their books to be open. But in order to be listed on the U.S. Security Exchange, you have to open up your books. They have to show that you're a real company, that you're actually presenting truthfully about your numbers. And they didn't want to do that. And so the fear was that, okay, well, if you don't open your books, you're going to get delisted. And so, yeah, nobody wants to be in a Chinese stock in that case. So then the other thing that we'd be looking at is, okay, recently they said we're going to start lowering our interest rates and we're going to start putting money into the market. The Chinese government said that, basically QE, right? So that helped kind of lift things. And then I also believe that they were going to change or reduce the pressure on the regulations about the open book situation. So that is why we've seen a lot of volume come into it, and then we've seen them suddenly turn around. But I've been having traders ask me, right here and right here, if something like BABA, Baidu, Chinese stocks were good buys. And I said, I mean, it kind of looks like it's trying to, but it's still not actually confirmed. And I said, be really careful about this. And if it doesn't work, just get out. And this is my point, talking about, say, Roku or Zoom. You can see here, look how far that weekly 8 was below the 21. And yes, there was a bounce, like right there. And where to go? To the 21 EMA. And that's what I'm saying about Roku and Zoom. They might bounce, but it's still not a confirmed uptrend. And even through here, you can see right there on the daily chart, it did get on top of the daily 50, and it looked like it was going to hold the daily 50 for a while, but then it didn't. And Zoom is perfectly capable of doing that. Roku is perfectly capable of doing that. Square, PayPal, just remember that. Keep that in mind, that they may not work. They are in downtrends and big downtrends for reasons, and that doesn't necessarily mean they're going to come right back just because they're on sale. It kind of means as though they've got some bad stink on them, and people don't want to touch them. So I think the Chinese stocks are kind of the same way. There's a lot of news, and there's a lot of governmental news, and a lot of big pressure out there. So personally, I'd be staying away. And Baidu, I mean, look at this. For as even Baidu didn't go down, look at how sideways it's been. Unless you are a day trader or a very sharp intraday trader, something like that, where you can actually take advantage of this stuff, it is death to be an investor in something like this. You're losing money. It's not going anyplace. Maybe you can sell call spreads and puts and stuff like that. There are strategies. But if you're looking for a directional play and you think that this is a good place to put money and it's going to appreciate, think otherwise. And even if you wanted it to go down, maybe you're thinking, yeah, Chinese stocks, let's sell it. Well, Baidu hasn't really gone anyplace. And that's what I referenced when you look at SGMS versus, say, Tempur-Pedic versus some other things that have been falling off cliffs. It's been a strange market indeed out there. All right, now let's go over to the indexes in general. So what I'm going to be talking about is where might the market go near term versus long term. So I wrote a newsletter a while ago. If you guys want to look and reference it, I was writing it right about here, and I said, is bearish too obvious, or is this move too obvious? Basically, almost everyone is thinking, yeah, this thing is totally going to fall off a cliff, and market's going to keep going lower. And I thought, I think that's too obvious, and the market doesn't like to be obvious. It's going to go the other way. And sure enough, it did. I didn't think it was going to go as high as it did. It definitely surprised me. I at least thought price was going to go to the daily 50, which was another one of my arguments was, hey, price is getting very, very stretched away from the 50, and price doesn't like to be away from moving averages for very long. So I was correct about those 2 points, but it just sailed right through the daily 50 and went all the way to the other range. Notice that it went from the third ATR to the upper third ATR. So it has cleared the entire range. So I now look at this and say, yeah, we need to start shorting that. And that's what we did. And it worked out beautifully today. And we'll see where it kind of goes from there. But I do think price is going to continue to roll over to the downside now that it's had this big bounce. The question is, so here's the unknown. We know that there's going to be a pullback. The unknown is, will this pullback come into support and then go higher? And if it does go higher, will it actually be running into, say, a double top, kind of like, say Roku, and then roll over at that point? These are the things we don't know, and these are some paths and ideas that I'm trying to communicate to my subscribers and you guys out here and say, here are some ways to think about it in case it goes that way, but we don't know yet, and we're going to have to keep following, the yellow brick road a little bit. The other thing is, what if it pulls back to the 50, say, and it kind of bounces around, kind of does something like this, and then it doesn't hold and it goes lower? That's possible too. Look at Baba. It looked like it was going to hold on that daily 50, and it didn't, and careened lower, and that's possible. But for me, I could definitely say this thing should be at least going lower from here, because I've got multiple patterns telling me that should happen. So for those of you who are Moxie subscribers and kind of see my stuff, first off, you got price moving up over a downtrending daily 50. So what do we know about that? Well, it's going to come back at some point. If it's going to hold, it should come back and test the daily 50 at some point. The other thing about that is we have price over the 50, but the Moxie indicator is still below zero. Those of you who are Moxie subscribers, that's an inverse trampoline move. So it shouldn't be up there. It's fine that it is, but it shouldn't be up there, and it's going to pull back at some point. So we can take advantage of that. The other thing is, on the weekly chart, we've got the leg, got the heel, and we got the arch of the foot. And that's because this is the first time that price has gotten over and tried to narrow the 8 and 21 to make the elf shoe pattern. And right now we're halfway through that. So what is the other side of the elf shoe pattern? It's that price pulls back, retest the low area. We don't know where, but it's going to retest the low area, and trying to form the ball of the foot. And if it holds, then sure, we can get price to go up. Otherwise, if it goes in here, it's a resting spot until price goes lower. So, we have to take it one step at a time. Right now, I can tell you there should be a pullback. I've got my idea of where, and then we'll have to see if it actually holds or folds from there. Now, if we take that And we look at, say, yeah, I got all that covered. If we look at the NASDAQ, this one is giving me a lot clearer ideas of where things might be going. So let me kind of clean this up a little bit here, and then I'll show you, I put some Fibonacci's on some things. So what we can see here is, again, if the Moxie subscribers understand that the 5250 maneuver, we've got price that crossed the 50, coming in here, getting rejected by the 200, and we should be seeing price at least come back down to the daily 50 for the NASDAQ. Now, the interesting thing is that Amazon looks exactly like this. Exactly like this. It's in the 5250 situation on the daily chart. So it kind of goes along with my thesis of what I'm expecting and that there should be a pullback. Apple is going to move the same as Amazon. Apple's in a different configuration, but it's still overbought. And same thing with Google, same thing with Tesla. They're all going to basically move the same way. I also have other examples of small cap stocks that are doing the same kind of situation. I'll show those at the end and how everything is starting to kind of line up. Well, not everything. Things that I'm looking at that are helping me make my decision are starting to line up in a very similar way to help formulate these theses of mine. We can also see that price got up to the third ATR. So, went from one side to the other. That's usually resistance. And price over the daily 50, but the Moxie indicator still below zero. It's an inverse trampoline move. So a lot of things are telling me we need to be seeing a pretty stiff pullback. We can also see the L shoe pattern here on the weekly chart. So we should see price come back down somewhere, retest the low area, and then we'll have to see if it holds or if it folds from there. That's really, yeah. So ours right now, the divergence on the hourly chart, I know that was kind of helped set us up in the beginning, but what we need to be looking at is actually the larger time frames. So the divergences or the Moxie indicator stuff that you're seeing on the lower time frames, they're gonna be important for a period of time. But when we start getting the bigger time frames involved, like the weekly in this case, and now the daily, they are the ones that are going to be dictating it, and we're going to start seeing some differences on the hourly chart. So ours, you're in the Moxie subscription. I know I'm familiar with you. So next time I go live, let's actually deep dive into that a little bit more, and we can talk about that, and I'll show you. And there is the possibility that if this is going to be bullish, if this pullback is going to be bullish and holds support and goes up like that, the hourly chart, ours, is going to be a trampoline move, right? So we actually get, say, the elf shoe on the weekly, the 5250 on the daily, and a trampoline move on the hourly, and it's all bullish. Yeah, then we've got a bullish move, and we could see price come up. Now, keep two thoughts in your head at the same time. That bullish move that we might get on this pullback could, in fact, send price up. But if it sends price up like that, then what do we possibly have on the weekly chart? We possibly have a head and shoulders pattern. And if that actually plays out, then this next move up could actually be into overall resistance, and that could actually be what sends the market even lower. So we need to go down now, and then we could go up later, only to then go down more majorly even later after that. I know it's like 4D chest, but if you guys have been around the market long enough and you understand how you need this, you need that, you need this, it really does start making sense and kind of puts in a pattern of what's going on. So yeah, we'll try to complete the 4D chest as you guys go along. That's why you're in the Moxie room. That's why you guys sign up for people like us, because we try to help guide you through this, especially if you have a day job. We eat, sleep, and breathe this stuff. And so that's our job, is to help guide you and give you a little bit more information into this so that you can focus on your family, you can focus on your day job, and you can tune in and basically read the summaries of what we give you and help guide you through these markets. All right. Now let me show you. I did a certain market update. Now I thought this was interesting. The NASDAQ actually is following Fibonacci's very well. The S&P, not so much. Notice from the peak to the bottom, the 618 retracement is right there. So how's that for a retracement? It's a Fibonacci. It's you got the 200, you got the third ATR, you got a lot of things lining up right at the same point. That tells us, yeah, this is in fact where price should turn around, and it is, I believe. So that really worked out. And then the other thing I did is I put a Fibonacci from the low to the high to say, okay, well, where might this pullback go? And notice that the 50% pullback or 50% retracement of this recent move is just below the daily 50. And I'm basically targeting the daily 50 as a pullback area. So that works out too. And I could see price, pushing a little bit past the 50. So watch for that. Let's see if the NASDAQ actually pulls back to say 344 and change. Just something to kind of keep an eye out there. All right, then I'll show you quickly. Let's look at AMZN. And just as I was saying, the head and shoulders on the NASDAQ might mean a double top on the S&P. Since the S&P is higher than the NASDAQ, if they go up proportionately after this pullback, then we would see head and shoulders for the NASDAQ and a double top for the S&P. Just more stuff to kind of keep in mind out there. So how about this? You see how Amazon is doing exactly the same thing that the NASDAQ is doing? Here's the leg, here's the heel, here's the arch of the foot. We'd be looking for the ball of the foot, and if it holds, we see price go up. If it folds, we see price go down. So I can see the first step of where we need to go, and then we need to reassess after that. How about on the daily chart? 50, 200, 50, right? So this is why I'm projecting for me for price to basically come down to the daily 50, and then we'll have to see where things go from there. The other thing you can kind of briefly see is that this on the weekly chart for Amazon ran right smack into the underside of the weekly 50. So a lot of confluences happening out there. All right, so that's Amazon. We look at Tesla. Now Tesla, I was actually saying Tesla was the weaker of the bunch last week, but then they had news about yet again another stock split, and that's what that was. That was stock split news. Even though I was expecting price to start to roll over from there, news trumps charts. All right, so that's what we got on that one. But at this point, come on. I would not be buying Tesla. I think Tesla's going to pull back. The big 4 or 5 are all going to move in the same way. The indexes are showing the same thing. I really believe these things are all going to start pulling back. So be careful. And I would also say that all of them are severely, severely overbought because they have not touched the hourly 50 ever. Ever since this move started 11 or 12 days ago, it has not touched the hourly 50. It is so freaking overbought, it's not even funny. So, and then look at this. It is now, it's jumped the shark. It is outside of the 30 ATR. It is floating off the 8 EMA. I mean, this thing is in like outer space. I mean, SpaceX just took Tesla on for a ride. So that's what I'm seeing in through here. And I'd be real careful about thinking that this is going to be bullish in from here. I would really, really want to see a pullback before I see it move back up there. But we don't know that yet. So that's what I'm looking at for that one. And then Apple, same thing. And we're starting to see them start to roll over and puke a little bit. I've been projecting we need to see price start to come back down to the hourly 50. It finally did. I think it's going to go below the hourly 50. And we'll see if it goes down to, here, 170, 165, something and change like that. And then we'll have to see if this works out to be bullish. Otherwise, these can be bearish. And I'll show you. This is an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0. And if this continues to be bearish, this possibly is an inverted elf shoe. Right there, like that. So again, if you guys are familiar with my patterns and stuff, you start seeing it. But the elf shoe thing is basically where the 8 and 21 get narrower. And if it wants to go over like this, it can. So that's what all this has been doing. It's been narrowing the distance between the 8 and 21. So if it wants to flip, if the 8 wants to go below the 21, it's setting itself up to. So this is why it's a very, very challenging market of what we're trading. Tops are messy. They're very messy. And we need to be prepared for things to be going in either direction. Google, and also 3 out of the 4 of these stocks that I just covered all have stock splits coming up. And so I would love to trade them, but they're not happening until later in the year. And so now is not the time to take advantage of the stock split news. It will be at some point, but not right now. But you can see same thing. Everything's overbought, starting to pull back, and this is what we're expecting. And if this continues to be bearish, then just like what I'm seeing on some individual stocks, including the S&P, we could be seeing price start to fall off the weekly 50. Like, be prepared for that. If this stuff gets weaker, because notice the 50 is below the 200, that's technically a death cross. And so if this wants to go lower, it can. The 8 is below the 21. It can go lower. And price is barely sitting on the weekly 50. It can go lower. So please don't mistake, I think, that the last 11 days has fixed the market. And we don't know that yet. All right, so just as I was saying, Google, in threat of falling off of the weekly 50, notice that the SPY is also in threat of falling off the weekly 50. It's already gone below it, but now it's back above it. And what if it wants to do this next? It could. We've only made a 15% correction. We could definitely do a 20% correction. And just, eyeballing it, a 20% correction takes us down to, roughly 382. That's below the weekly third ATR. That's a fairly healthy distance just visually looking at it that it could go. Now it might go higher before going lower, but it could still do that. So let me show you some examples of why I'm saying that and why these things could go lower. All right. Everyone's still there? I think my internet just glitched for a second. All right, so TPX. Now, this isn't to say that thank you, that the S&P is going to quite do this, but I want to show you that there's some precedent for how these things are moving. Notice TPX. We had a big move up like this on the daily chart. What was it though? It was an inverse trampoline move, just like what the S&P is doing right now. Notice how price was over the daily 50, but notice that the Moxie indicator was below 0. That's an inverse trampoline move. And you know what? People trade in this maybe. If this was the S&P and you're like this, you'd be like, oh, hey, yeah, this is great. I mean, look at this uptrend. I mean, look how energetic this is. Look, we're going up, making new highs. But what happened? TPX made a double top. Yeah, TPX made a double top, which is what I said that the S&P might do if this pullback actually is bullish and it starts to head up and makes a new high, or close to a new high, because it's a double top. It's a possibility. And what if that double top is an inverted trampoline move on the daily chart? That's going to tell us that the next thing that comes is the market rolling over. It's a possibility. And then you can see here that TPX, Tempur-Pedic, fell below the weekly 50 and kept going lower. That's a possibility. Also notice there's the leg, there's the heel, there's the arch of the foot, there's the ball of the foot, there's the inverted elf shoe. Keep an eye out, see if the S&P does that. All right, then DKS, another one that we've been trading, and started moving nicely today. But here's what I'm looking at. Here was another inverse trampoline move right there. And also look, here is price starting to fail and fall off the weekly 50. What if this thing starts building up some speed to the downside? And what if it really starts to fall off? It's basically the same thing that the S&P is doing, is it's starting to weaken the weekly 50. And what if it starts to fall below the weekly 50 in a similar fashion? HIBB, same thing, double top right through there, and bounced off the weekly 50 once, came up, did a double top, and then failed through. The S&P could possibly do that. Look at the daily chart. The S&P is basically doing this, right? The S&P went from oversold to overbought and then careened to the downside. What if the S&P does that? So one more thing to keep in mind, just trying to show you ideas and examples of how stocks move so that you can say, I'm familiar with this. I've seen this before. And now if the S&P does this, I won't be surprised because I've been shown a roadmap of how it might go. And then TW, which is another one I'm looking at, you can see, what does it have? This is an inverse trampoline move on the daily chart. And you can see here that price is already below the weekly 50. The 8 is below the 21. The Moxie indicator is below 0. Sure looks to me like TW probably wants to roll over and start going down again. So this was a bit of a pullback and a downtrend. And then TWTR, Twitter, same thing. How did it start? Well, double top, right? You had price got oversold, then it ran all the way up, got overbought, and then came down to the 50, then got rejected by the 50, and then continued on down. And you can see right here, it failed the weekly 50 and kept going lower. So now I did find an example, CTVA, of how I thought, well, what if this actually resolves itself and what if this is bullish? So here's a roadmap for the bullish side, because I don't want it to, I don't want to be all bear or whatever and, be wrong about something. So here's something to put out there and say, well, what if it goes the other direction? What do I look for? How do I train my eye for what I want to see if this in fact does work out? So look at CTVA. You could say right here on the weekly chart that price did get below the weekly 50, just like the S&P did. And then you can see we had a big move up, just like the S&P is currently doing. You'd see on the daily chart, it's up here at the third ATR. And then what? I'm expecting to pull back to the daily 50, right? Oh, look, there's CTVA pulling back to the daily 50. And then what's it do? It pulls back to the weekly 50 and starts actually holding. It's real choppy. Don't get me wrong. It's real hard to hold through this and actually trust it. But essentially what it does is it gets the 50 back on top of the 200. And you can see that price essentially flags into it. There's a little dip. I know it's not the easiest thing, but it holds and it continues to go up here. And you can see that, yes, it made a double top, but it held and then started to make new highs. So I've at least laid out what the bullish and the bearish case might look like and giving you some roadmaps and examples of what to, I mean, really take these names, put them on your own system, copy them, print them, put them next to your board and just say, maybe here are some ideas for the way price might move, bullish or bearish for the market. All right, now let's go over and let's start with the VIX. Because the VIX is a little bit bigger. And talking about, let me get this on here's the monthly, and here is the weekly. Now, this is a little bit of the bearish case for the market. If the market is going to be bearish, and we're going to see it roll over, and then we're going to see the VIX actually spike and probably see it in a big way. Here is the case for the VIX being bullish and the market being bearish. We could see that recently, over the last few months, the VIX has gotten on top of the monthly 10 SMA. Technically, that's in an uptrend. Price is on top of the moving average. So be aware of that. And on the weekly chart, we could see that the 8 is over the 21. That's technically bullish. That's the fast moving average over the slow moving average. And not only that, we have price over the weekly 50. Technically, that's bullish. We even have the Moxie indicator over 0. Okay. So energy, momentum, according to the Moxie indicator, is also bullish. Then let me come over here. Let me show you the daily and the hourly. Not so much to see about the hourly yet, because it's still pulling back, but there is the possibility that in through here, it's reached the third ATR and it's coming into the 200. And you can see that before the 200 has generally been support. And what if the 200 starts to turn up a little bit and we do have the 50 over the 200? So a little bit of work in here, and what if it starts going higher again? So if the VIX starts to go up, that's bad for the market. And I see that there's possibility on the monthly and weekly timeframes, and even the daily, that the VIX is starting to build an uptrend. Now let me then talk about the UVXY. And I literally never talk about UVXY on the weekly time frame, mostly because there's never anything to say. The UVXY almost never trends. It has blips in time, and it never bases long enough to actually do anything on the weekly time frame. So that's actually why it's a bit of a phenomenon that I'm talking about it now on the weekly time frame. One of the patterns that really worked out was the 50-250 maneuver. This was perfect. The UVXY perfectly got rejected at the 200, which is, I was guiding the subscribers about that and said, yeah, I think we're seeing a 50-250 maneuver on this, and we should see the market go higher. This is part of why I wrote that newsletter saying, I think the downside's too obvious for the market, and it worked. So what I'm trying to point out here is notice how close the weekly 8 is getting to the weekly 21. This is basing, the UVXY is basing, and if this holds and actually works out, I'm not saying that it is, but if it works out, then this is setting up for leg, heel, arch of the foot, ball of the foot, elf toe. And I have a feeling that if this works out, we could probably see the UVXY get up to the third ATR on the weekly time frame, which is $30. That's a huge move, which would mean that's a pretty big drop in the market. I'm not trying to predict it. I'm just saying here are some things to watch and be aware of it if it's going to work out, because the elf shoe pattern is starting to form on the weekly time frame for the UVXY, which I can't remember the last time I've ever seen that happen. So it might be something. It's also the UVXY. I don't entirely trust it, so I'm only going to trust it when I see it and it starts actually setting up. If it is going to do something, we've still got a little ways until it's going to happen. It's not going to happen next week. It's probably not going to happen like 2 weeks. It's going to take some time. So not trying to panic anybody, but it's something to watch. The same thing to watch with the narrowing of the daily and the daily 250. The distance between this 50 and the 200 starting to narrow. That moat is starting to narrow. So if price wanted to go up, it could, because the distance between this is now small enough that price could actually walk across. And if it does do that, next time the 200 will not contain it. If this wants to go up next time, it's going to, I bet you anything, it's going to blow right past the 200. So we're going to have to see if that happens. And if it blows past the 200, then yeah, like, $25, $30 could be seen. And at least from here to there, that's 121%. So it's possible. Keep an eye on it. All right, then we get into, let's say, gold. And if we look at gold on the higher time frames, we have a monthly squeeze. John has been talking about this, loves the squeeze, all that, and he's a big gold bug, and he's been buying gold and all that kind of stuff. And we've already seen one big move. Now, this big move that we've seen on gold did an exact double top and then pulled back. All right, just some obvious things to look for. You can also see that price got really overbought because it got way outside of that third ATR, and now it's come back to something to be reasonable. And I do think gold's going to keep going up. I just do. It looks good. It's finally broken out. We've got everything saying, yeah, it's going to go higher. I'm just trying to figure out when I need to get in. But then that monthly squeeze is there. It's looking pretty good. And we can see the same thing with silver. Got a monthly squeeze. And you know what's changed on silver? Price is now over the monthly 10. That's different. So watch what's happening. It's changed, and price is trying to get over this. Now, the one thing I'll push back on silver, from my understanding, silver is an industrial metal. And if we are going to go into a recession or something happens with the economy, silver might not be the place to be as far as precious metals, because if manufacturing and purchasing and stuff like that for goods and just the economy goes down, silver might not really go up. So if you want a precious metal and to find some safety, it's going to probably be gold over silver for part of that reason. All right, so we've gotten that. And then let me go back to gold, because if gold is going to be the one that actually moves up, how do we figure out where this thing is going to be a good entry? One spot might have actually been the daily 50. So daily 50 tends to be a pretty good place for price to pull back, and it's there. The one thing I'm also seeing about the Moxie indicator is we've had a positive divergence right here on the hourly chart. Now, I want to give it just a little bit longer in order to help prove this thing in case maybe there's a dip. If there's another dip, maybe I'll buy it. But I'm starting to see that price on gold is basically flagging sideways, and the Moxie indicator is confirming that with it wanting to start trending up. So there's a little bit of something there. USO. We know, of course, all the news about that with oil and why it's going crazy, but I don't think right this moment is the time to buy. Again, with the third ATRs, you can see on the weekly chart, price got really overbought, and it pulled back. Now, the interesting thing to see is that it's not necessarily falling. It might just actually be flagging. So what could be happening is we could just kind of be flagging right here until it finds support and goes up again. It's a possibility. But what I've been seeing is I have not been trusting, say, this move for the same reason I didn't trust the up move in the S&P recently. Notice the giant gap between price and the hourly 50. I didn't trust it. The Moxie indicator was late. Now we have price getting rejected by the underside of the hourly 50. So again, I don't know if this thing's going to go down, but it sure looks to me at least needs to take a little bit longer of a break. It's not ready to go up. If it just can't go up like this, they don't happen. They need to take some time to consolidate, stay within their parameters, stay within the ATRs, and find support at moving averages like that. And then here, what I wanted to, well, I'll get into this a little bit later too with a little website that I have, but the fact that oil has moved up so fast, I think you guys have probably heard about it and read about it, that anytime energy, the cost of oil, goes up by 50% or more, a recession is always followed. And we've gone up something like 89%. So I've got an article to show you that a little bit later. UNG. Now UNG, we are in this. I wish I had gotten in a little bit sooner, but I got a little distracted, to say the least. I was telling my Moxie subscribers, I said, hey, price right here is getting held up by the weekly 200. I said, I have a feeling a little bit of pullback or some sideways movement for price to kind of build up some steam, some energy, and it's going to break out. As I said, I wish I would have kind of bought it down here or even here. I can't tell you the last time I traded UNG. It'd probably been 3 years ago because it just wasn't doing much. But that's why I was a little slow to it. But now that it is broken past the weekly 200, just like what I was saying about the UVXY, the fact that it's broken past the 200 for the second time, I think this is the real move. You know, just like the UVXY originally got rejected by the 200, but then if it gets there the second time, I think that's going to be the real move. And so I think that right now we're actually watching the real move on UNG and natural gas. And so I have a feeling that there's going to be some more upside. Look for dips to buy, and I think that this thing's probably going to trend for a while. All right, so then we get into some commodities. How about moo? My dad, funny enough, actually makes a really good mooing sound. It's kind of crazy. He would do practical jokes on people, and you should just see him freak out and like look behind him, thinking that there's a cow behind him. But he does a he does a really good a moo impression. So commodities, I'm not so sure I'm necessarily into these things, but I think we've seen that inflation and commodity prices, steel, lumber, I mean, you name it, everything has been going up. I want to remodel my house. It's going to be really expensive. Thank goodness I'm not trying to build a new garage with a bunch of steel like a friend of mine who I was just talking today. It went from his cost to build a 2,400 square foot metal garage went from 80,000 to 120,000 just because of the cost of steel. So not fun. But there you go. Look how well this actually worked. Moo went right, it's cattle, in case you couldn't tell, went right into the weekly 50 and bounced off of it. Moxie indicator was above zero. You got a squeeze. You even had a double bottom on the stochastic. So, and then look at that right there. You guys see the Moxie price trigger? How's that? Moxie price trigger for the win right there. It got you in. It got you in on the daily chart, and it got you in on the hourly chart. Like, how good is that? So there's cattle, XME. Another one we can look in here. You got the metals and mining, and you can see the same thing. Went right into the weekly 50 and bounced. Same kind of deal. Looks identical to Moo. And then you can see down in here, there's the Moxie price trigger to help set you off. And again, there was the Moxie price trigger. Now, obviously, there was some back and forth as it was trying to get going, but it does at least give you the proper entry when you need it, and it starts to take off. Now, I wouldn't be buying it right here. It's a little extended, again, with the third ATRs, but I'd look for a pullback. I'd look for a flag, probably something similar to USO, and see if it's going to work out that way. How about wheat? We all know that that thing went crazy, the conflict in Russia, Ukraine, but you know what? They don't go straight up all the time forever. Okay, they're going to chill out. And you can see that there's a giant gap between price and the daily 50. You can see price got way outside of the third ATR and off the 8 EMA on the weekly chart. They're going to come back down at some point. Now, it could keep going higher. I think they're going to, but they need to consolidate and flag for a little bit. Here's the Moxie trick for you. Notice inverse trampoline move right there. Not a time to buy. Just because you look at this and you say, oh, price is back on top of that moving average, it's going to go again. This is where you have an ace up your sleeve with the Moxie indicator, because it told you, don't go long right there. That's an inverse trampoline move. Don't short it necessarily, but it's saying, I'm not ready to go right now. And that is the Moxie indicator for the win right there, keeping you safe. Okay, and let's see, wheat. We got corn. Now, again, corn pretty overbought right now. I would wait to see what it's going to do. Here's a bit of an inverse trampoline move on the hourly chart. Probably is going to want to get a little bit closer to the daily 50. But notice right there, there's the Moxie price trigger right there, right there. So there you go, Moxie price trigger for the win. And then you can see very nicely that corn was holding the daily 50 right in through there. So we got corn, CPER, copper. I mean, look how some of these, again, I don't know if I trade these things, like that's up to you guys, but look at copper right into the weekly 50, Moxie indicator above zero, squeeze. It looks just like XME and Moo. And then look at this, there's the Moxie price triggers starting to fire, and you can see price starting to hold the daily 50, and it's starting to work out. Very choppy, it's commodity, trade at your own risk, but it sure looks like a lot of these other charts that are starting to take off. So there's copper, cane, sugar, like cane sugar. Notice what it's doing. Right into the weekly 50. Squeeze. Moxie indicator above zero. Here's the Moxie price trigger firing, right? Here was a trampoline move right there. And then you get these pullbacks into the hourly 200. You know, that one looks like it's starting to go too. So sugar is going to get expensive. All right. Ball. This is like a hay bale. And now the interesting thing to note, if we kind of flip over to here, this, let's see, 2020, we got 20 right there to the day. That was when COVID hit, right? And so everything stopped in the world and it went down. But then we started realizing that there was shortage and maybe inflation, but then everybody was shopping and bought everything online. Here on the weekly chart, you guys see the Moxie price trigger? So on a weekly chart, if you're into wheat, or sorry, cotton, there was your trigger right there on the weekly time frame. And you could see that that led you because of the positive divergence. So the Moxie indicator was giving you a heads up, and then it gave you a trigger on the weekly time frame. And basically, this thing has been in an uptrend ever since. Even when it flagged in through here, the 8 stayed over the 21, and it just kept going higher. So, you know, do whatever you want to do with that one. And then I'll show you in through here. How's this for some triggers? Moxie price trigger, Moxie price trigger, Moxie price trigger. So even if you wanted to be trading this, even look at that. There's the exit. There's the exit. Real nice. And then agriculture, basically, I think it's overbought for right now. You know, like NTR. If you look at some of these stocks, they're fertilizer, they're agriculture related. They could keep going up higher eventually, but I think right now they need to take a break. Part of what I'm seeing, price up, Moxie indicator down, there's negative divergence. I mean, this thing is way outside of its third ATR. If I didn't show you a couple examples already, that when it gets that extended, they tend to pull back or at least go sideways. So I would be careful about these things, that now's not the time to buy them. Wait for a pullback, see if that pullback is into support. And, you know, again, big gap between price and the daily 50. So NTR, you know, CF is basically going to be looking the same thing. They're all looking the same way, very, very extended, very high up there. We're starting to see some negative divergences on the hourly chart, like price up, Moxie indicator down. They need to take a break. So I think that's what we're seeing on those. CF, MOS, you know, very, very high, all needing to take a break. And then if we, CLR, this is oil, but I just want to show you an example because I love to show examples somewhere else to show you kind of the roadmap of why I'm coming to the conclusions that I'm coming to. Notice how CLR back here, what did it do? Went straight up, got outside of the third ATR, got outside of the third ATR, and then what did it do? It pulled back, and it pulled back fairly hard. You know, it came back down to the daily 50, went even a little bit lower, came into the weekly 21. This is what I'm concerned that some of these agriculture, fertilizer, something like that related stocks, they're basically up here. So I would expect them to either, you know, go down a little bit, maybe go down a lot, but they're basically going to pull back or flag until maybe the next opportunity, right? So let's see. Let me kind of take a little moment and, oops, closed. There we go. And then one thing I wanted to talk to you guys about, we'll just kind of take this and show you real quick. We do have a Moxie indicator bundle. So if you guys like kind of what I've been talking about and seeing this stuff, again, not hard pressing or anything like this, but I know we get a ton of questions when I do things like this. People are like, well, where do I get more? What can I do? So I'm just trying to show you guys where you can find more information. We do have a special going on. If you're interested, this particular special, we have the class that I just taught a few weeks ago about shorting the market. Seems pretty appropriate since the market is basically bearish. And then you can pick up the Moxie indicator. You can pick up the scans. And we got the 2-day live recording. I put on 5 trades for that 2-day live trading, and all 5 of them worked out to the short side. So that was pretty fun, worked out nicely. And then here's the thing that I've been working on for the last few weeks. We came out with some micro classes. So, you know, little bite-sized things. They're about an hour long, a little bit less than an hour long. I have 3 of them that we put them in there. And if you guys are interested in learning some ancillary stuff about trading and about my methodology and the other things that I do in order the principles to actually learn, that's where you can find it. It's going to be in here. We're going to include it into this thing. And then you can get it also includes the Moxie Mastery Trial. So I think it was what, $45 or $49, $47 included into this. You get 30 days in the Moxie alert room, and you get all the material there. You get to talk to me. We're going to have live trading. and then you can kind of put the rubber to the road and get it there. So just wanted to put that out there. Done with the cells, and that'll be it. All right, so uranium. Since I know we were getting some questions about that. Honestly, it's a mixed bag. I want to say I'm bullish on them, and I've been watching them for a while to try and figure out, okay, where do we get in on them? There seems to have been right there on the weekly 50, and there was a double bottom, but I'm trying to find the pullback and say something like I want to say that this is a flag until maybe the 50 comes up and then we can go higher. I'm looking at that. And then you have URA. And it seems like it's kind of doing the same thing. You know, it bounced off that weekly 50. Seems like it's kind of coiled up right there on the daily chart. I can't quite figure out the hourly chart yet. That's what's kind of holding me off. So I don't know if I just want to kind of just make a position and have these things go up, because it seems like they want to go higher. That weekly chart looks very interesting. CCJ, it's already making new highs. So I'm not ready to buy it because I don't want to buy it up there. I'd like to see if there's something I can do, but CCJ looks like it wants to go higher. URNM, same thing, kind of looking like the other ones right there, just kind of coiled up there on the daily chart, the weekly chart. So I'm pretty close to wanting to take action on something like this. I do think it sure looks like they're going to go higher, but they're a bit mixed. It's a little tough to tell. And then UROY, we traded this and made some money on it before. This is one of the things that's kind of throwing me off. UROY actually pulled back fairly hard right into there. Now, maybe that's great. Maybe this is a pullback into the 50 and it's going to go up from there, but I need to see it actually turn on the hourly chart. The hourly chart's just not quite ready. So got to feel that out a little bit. But yeah, big picture, they sure do look like they want to go higher. And, I think I could be a little bit late to the party if that's the case. All right, so then here we can go to recession metrics. So let me talk about this, because there are some things in here. A lot of people are talking about recession. We'll have to see what the market wants to do about that. Yeah, David, no problem. So there are quite a few uranium stocks. They're messy. That's one of the things I don't like about them. I like smoother stocks, but that's kind of the market we have right now. And so if you're kind of okay with a longer term thing and dealing with some volatility, it does seem like they might be a good place to start picking them up. And we'll have to see if they work. If they start to roll over, then we'll have to say, okay, that didn't work out and get out of them. But, CCJ looks like it might be leading the pack. All right, so here are some things to talk about. This is what I was talking about. So that during anytime energy prices have jumped by 50% or more, the last 30 to 400 years, a recession has followed. Okay, well, the price of oil, crude, has gone from 62 to 117, which is 86% increase year over year. So you got to think, okay, well, why does this matter? Why does the cost of oil matter? Like, yeah, it sucks at the gas pump. Okay, but why? Well, even for our daily lives, if you or us or anybody else is spending more of their disposable income on gas to get to and from work, well, then we're going to have to take that money from someplace else. We may not take that trip. We may not buy that TV. We might not do things that are going to create our GDP and keep the economy going, because we're having to spend it on something we already have been spending money on. We're just going to have to put more money there. So by more people not buying that TV, not buying that clothing, not going on that trip, and not going on tourism, that's going to slow the economy. And so it's kind of a vicious cycle, right? You think about that. You also think about factories. It's going to cost them more in order to make their goods, because the cost of plastic goes up, the cost of raw materials are going up, the cost of running their factory is going up, the cost of everything is going up, which means that even companies have less money to spend elsewhere. They have less money to spend on marketing or on labor or on literally anything, because their cost of their overhead is going up, their profit margins are going down. And so it's also starting to kind of slow the economy. So all of this stuff, like an inflationary cycle, is really hard on the economy. The other thing that we can be looking at, well, I didn't know this one until I read it, but like the rising price of wheat. So there was something that he said that the last time wheat was this expensive, the global financial crisis ensued. Take that for what you want. I don't have anything to say pro or con about that, just something to kind of take for information. The other thing The Fed's plan to increase interest rates could also be a sign that a recession is coming. Because again, you raise interest rates because you're trying to slow the economy. It's on fire right now. We raise interest rates, it slows the economy. When the economy slows, you lower interest rates because you're trying to grease the wheels. It's, up, down, up, down. What are you trying to do? So raising interest rates tends to put pressure on the economy. So yeah, and then inflation, roughly 8%. Of course, that's like what the government is saying. I think real inflation is probably closer to 15% from my understanding and what I've been seeing. Even my mom, I did calculations from her shopping bill, she said, and her inflation numbers from what she's been telling me about cottage cheese and milk and whatever is about 15%. All right, so yeah, moving forward with interest rates likely to crash the economy, stuff like that. And then we also get into yield curves. We talk about the inverted yield curve. Okay, maybe you guys all know about that, maybe not. I'll tell you that in a second. And an inverted yield curve has preceded every recession in the U.S. since 1955. Just another thing to kind of keep in mind there. Now, an inverted yield curve is basically the difference, the gap between the 2-year and the 10-year. All right. So when that gap narrows and then goes the other direction, that's the inverted yield curve, and that is when people start saying, yeah, a recession is coming. So we're using bonds as a way to see how people, investors, view the state of the economy. Inflation, we talked about that. Obviously, it is rampant. Well, maybe not rampant compared to the 70s, but it's significant. And everywhere I'm talking, people are feeling it and seeing it. I think we're all experiencing it, and it's going to be hard to really keep the economy singing when inflation is going high, because people are just going to have to spend more money on stuff, and it's going to be hard for people. And we know that the government, the Fed, is going to have to do something about it, which basically means they're going to have to put the brakes on the economy. And they always talk about a soft landing, and we'll have to see if they can actually execute a soft landing. There have been a lot of talks that basically you need to kind of crash the economy, or at least put the economy into a recession in order to slow the wheels of inflation. So there's something out there. Interest rates. Has anybody looked at the TNX? How's that? Now, when interest rates and the TNX first started going up, and we were all talking about this back, let's see, February, right here. So this was the last time that we kind of saw interest rates going up like that. So in through here, that was, and what happened? That was when the market actually started to fall apart from the inside. That is when we started to see breadth peak and start to roll over. That is when we saw the small caps got murdered. The February 15th, basically mid-February, is when they all started rolling over. And the talk at the time was because interest rates were going up. The TNX was going up, and it was putting pressure on small caps that basically have a really high rate of burn, and they need a lot of cash and they need to borrow it. And so now they have to get repriced and everything like that. And so it's bad. So that was that. But now we have another wave of interest rates going higher and the TNX going higher. And so the question becomes, how high does this go until it actually starts to affect the bigger stocks or the stock market in general? Now, I'm not the best with this. I think Sam is actually really good with this kind of stuff. So if you guys want to talk to him a little bit more, but this is my understanding that, okay, interest rates higher. It's hard on everything. It's less free money. It's more expensive money, and it's going to kind of put the brakes on things. So start watching for larger stocks and overall the market to maybe feel the pain of interest rates going higher. And then housing costs. Now, I talked about this in my last presentation. So one way XHB, this is the home builders. With interest rates going higher, it's going to put a squeeze on the housing market, right? Because mortgages are directly tied to interest rates. People buying houses, it's going to get more expensive. People can afford less house for the same amount of money when interest rates go up. So obviously it makes total sense that XHB rolled over and started going down, and might continue to just keep going down. It might just kind of keep deflating. So watch the housing market. The housing market's probably going to start rolling over. One way to look at that, I copied this. If you guys are familiar with the Case-Shiller Home Index, check this out. I did talk about this in my last presentation. This is the You can see it right here. It's the Case-Shiller Home Index U.S. National Home Price. This is fascinating to watch. And if you guys actually study this and go back to 2008, it moved exactly like a typical chart. We got into a blow off top. You could see that there was a double top, or actually there was a head and shoulders. And then you could see price actually got below the moving average, and then that started the move down. Where do we think we are up here? Pretty excessive, right? If this was a normal stock, would you be buying this? I wouldn't. So I think people know that. I think they know that this is like crazy housing market. It could keep pushing. We don't know how long this can go. You know, we saw that 2008 did push for a little bit. Now, I'm not saying that we're in 2008, we're going to get a crash like that, but we should be watching this. It's probably going to start leveling out and then doing a typical head and shoulders or double top pattern or something like that. Mostly because I think interest rates are going up and it's going to start changing the direction of housing prices, which again is probably going to have an effect on the economy. Because if the value of your house goes down relative to how much you purchased it, you might start feeling a little bit less rich or less wealthy. And so that might have some effect on how you operate in the economy. Just think about it. All right, so that's one way to look at that. And then let me just wrap up here, and I'll show you a couple of interesting tickers of why I also think that we should be seeing a pullback coming soon. And then we'll have to determine if that pullback is into strength. So here's Plug. You guys will notice that I'm actually pulling all from similar. Plug, Bloom Energy, F-Cell, ChargePoint, and Blink. For those of you, again, Moxie traders, you guys know my lingo and my rules and all that kind of stuff. What do we got right here? Here's the leg, here's the heel, here's the arch of the foot. All right. So what do we need? Price can't just kind of keep going up like this. Notice that the 8 is still below the 21. If anything, this is the first time that the 8 is starting to narrow and get closer to the 21, meaning that generally speaking, we need to see price come back down, retest the low area, and then if it wants to go higher, it can, because it's already narrowed that 8 and 21. It's doing the ball of the foot. So I see something like this and I say, hey, weekly time frame. Yeah, you need to do a pullback to go to the ball of the foot, and then we can talk about going up later. Then I look at the daily chart, and what do we got? 50, 200, 50, right? This is exactly the same pattern that I just showed you guys on the S&P and on the NASDAQ. You know, elf shoe, 50, 250, all those kind of things. So for Plug, just as an example, let's see if Plug starts heading back down to the daily 50 from this point. How about Bloom Energy? We'll look at this and get this. This one's done a little bit better. You can see that, yes, in fact, there was a little bit of a pullback right there. Again, talking about the elf shoe pattern. So now we do have the 8 over the 21. So we still need to have it come back down here, because here's the 50, 200, 50 maneuver. I know this thing's up. It looks great, but watch. I bet this thing comes back down much closer to the daily 50. And if we look at the hourly chart, what is the Moxie indicator doing? Do you see how the Moxie indicator has flatlined right there compared to price moving up? I talked about this 2 or 3 days ago in our training room and our stuff. And then look, next couple days, there's the Moxie price trigger, sell trigger. You know, get out. And you can see price moving up, Moxie indicator moving down. Just watch. I bet price starts to come back down closer to the daily 50, and then we'll have to see if this thing actually works as a long. We'll have to see. But these things have to go down before they go up. F-Cell was another one that I talked to the subscribers about. I said, watch. You know, watch this thing. Watch it come back down. Here's the leg. Here's the heel. Here's the arch of the foot. We're in the process of building the ball of the foot, and then we'll have to see if it goes up. And here's the 50, 200, 50. It's already on its way. Already on its way. And if you look here, price moving up, Moxie indicator moving down. There's the Moxie price trigger. You can see the Moxie indicator is now down, trending lower. And I'd love to see this thing move lower so that if it works out to the long side later, I can pick it up. I can pick it up on a pullback. How about ChargePoint? Same deal, right? Here's the leg, here's the heel, here's the arch of the foot. So what do we need? We need price to come back down somewhere, ball of the foot, and if it holds, it goes up. Now, there's no guarantee they'll go up. We just have to see the first part first, and then we can reassess. But here's the 50, 200, 50, right? And we can see here price moving up, Moxie indicator starting to move down. Watch this thing start to roll over at any point. Yeah, one more ticker and then we'll get into the Q&A. All right, blink, same kind of thing, right and through here. So leg, heel, arch of the foot, ball of the foot, elf toe, 50, 200, 50, like that. So just trying to show you guys that there's some similarities and similar patterns out there to take advantage of. All right, now let me get into the Q&A, figure out where I put that thing. All right. So let's see, BLMN and BLMN, Blooming Onion. Well, I don't see too much right now, but I think what you're picking out is, well, for one, leg, heel, arch of the foot, ball of the foot, there's the elf toe. You guys see the exact pattern that I just talked about with Bloom Energy, Blink, all those kind of things. And you can see 50, 250. On that case, actually, no, I take that back. That was the 50, there's the 200, and then all the way back down there. It was a huge one, all right? But now we have price below the 50. The Moxie indicator is above 0. Should be a trampoline move. You can see some positive divergence here. Yeah, Blooming Onion. If this thing can continue to hold this area and start to move up, and if it can do this and start to move up, great. But just be careful. It may not. It could do this. It could run into the 200 and go down. We have to prove, we have to verify which direction it wants to go, despite what the indicators say. So we need price to continue to hold the moving average. We don't want it to run into this and go down and get rejected by the 200. So the question is, will the 50 hold or will the 200 hold? EXPR, yeah, this is one of ours. And basically, I'm looking at this. I know it's technically a trampoline move here, but I think that price, if it was going to hold, would have already held. And I think it's going to continue to roll over here. And I'd love to see what it's going to do over the next few days when the indexes themselves actually start falling. So when the market pulls back, if these things don't pull back, then I got to get out. But if they go with the market, then we're great. Oh boy, let's see. Let me see if I can. Okay, hourly Moxie way above 0 on the SPY pullback. Does that perhaps indicate that daily will have a higher ball of the foot? I'm projecting the daily 50. It's less about the hourly chart here, because as I said earlier, the daily and the weekly are really in charge. So if this is going to be bullish, then yes, pull back here into support, and then we'll have to see if it moves up, and that should be a trampoline move on the hourly. But there's no guarantee that's going to work, because if the weekly and the daily are stronger to the downside, then that's going to overpower what we're going to see on the hourly. In fact, there are probably going to be a lot of chop, and then we'll actually see an hourly short entry. But we're a ways out from that. We're quite a ways out from any of that. Well, I can't give away all the secret sauce, but a slight idea of what the Moxie indicator is it's a momentum-based indicator, and what we're trying to do is calculate acceleration of price, and we need to just figure out on this particular time frame how fast is price moving up, accelerating, decelerating, and is it positive or negative. So, for example, on the daily chart, we can say that yes, price is accelerating up, but it's still negative. Momentum is still negative. But yes, it stopped being less negative and it started going up. But because it's below 0, it's still technically negative. That's why I have my rules that I don't want to go long on that particular time frame until the Moxie indicator is over 0, because it's just less negative. So we're just trying to figure out whether momentum is positive or negative and how to calculate the rate of acceleration. Let's see. So is the Moxie indicator more accurate over longer time frames than shorter time frames? Most of today's discussion was focused on longer views. This was a good perspective for me, as a 3-month time frame is my usual. Well, it's kind of a jack of all trades. The Moxie indicator is accurate for whatever time frame you're actually trying to look at it for. So I tell people that how I trade and the things I teach can be applied to day trading. It can be on the 15-minute, it can be on the 5-minute and the 2-minute. You just take all the same rules and apply it to that time frame, and it's still accurate. And then what you can do, you can apply it to the daily and the hourly, or you can apply it to the weekly. The reason why I showed most of this stuff on the monthly, the weekly, the daily, and even the hourly is because I'm trying to show you larger trends. I'm not trying to get down in the weeds with day trading. These are larger forces that are at play right now. Look at commodities. Commodities are slow. we're talking monthly and weekly timeframes before these things really get going someplace, and then when they go, they're going to go for months. Look at gold. We're seeing a monthly squeeze on gold. So I'm just referencing larger timeframes. It has nothing to do with Moxie. This has everything to do with what we're experiencing right now with the market, and the size of the timeframes that are relevant. There's no way I want to be talking about a 15-minute time frame right now. It just isn't relative. Even the hourly is not super relevant on some of these things. It's really about the monthly, the daily, and the weekly for the bigger picture. So the Moxie indicator does great on those, but it also does great on the lower time frames. I have lots of subscribers and users who can attest to that. And even I can show time and time again how the Moxie indicator sets up on a 2-minute, 5-minute, and a 15. It just depends on whatever time frame you're trying to tackle, and the Moxie indicator does a pretty good job for them. The symbol for the Case-Shiller Home Index. We will have to get that. Actually, just Google it too. It would probably be a great way to do that. But if you can actually, if you want to type this out while I'm standing here answering the next question, I will put that there. And I don't. Let's see. I can't make it bigger. Let me do this for you. It's right there at the bottom of your screen. So if you can copy that, that's the ticker. Any update on when the Moxie scans will be available on stock charts? That is out of my wheelhouse. It is up to stock charts. We would love to get them on and built, but stock charts, from my understanding, needs to continue building out more of their platform in order to make scans available. So it's not on us, it's on them. I love working with them. They've been great, but it's just their business model and they have other things that they need to be working on. So yeah, if you want to put a little pressure on them, go for it. Just say, hey, I'd love to see when this is. Can you keep working on it? Something like that. But they're great people over there. I talk to them all the time, and yeah, we're just trying to get stuff built. And let's see, TLT, huh? Well, TLT is basically the opposite of the inverse of the TNX. So it's been going down. I don't know what there's to say. It's been trending down. It is at the third ATR, so maybe that's one thing to say, that it might be bouncing a little bit just because it got overextended. You can see the last time it got to the third ATR, it did kind of bounce. That's about all I can say for that right now. Not too much on the hourly chart. The hourly 200 is still in a downtrend. The daily 50 is in a downtrend. Now, it is getting a little extended from the daily 50, so maybe there's a bit of a bounce along with that third ATR on the weekly. So yeah, that's about all I can kind of say for that. It is in a downtrend. Maybe it's a little oversold. Maybe it's going to bounce a little bit or flag sideways, but it's still basically in a downtrend until we see otherwise. Assuming we do enter a recession, I assume shorts only trading moving forward. Not necessarily. This is what I started out the whole thing today with. This market has been bifurcated. A lot of things have been going up. So, gold might still go up in a recession. I guess oil may not really go up in a recession, especially if things are contracting. There will always be something going up, even when the market's going down. You just have to find it. And yeah, I think we're going to have to cross that bridge when we get there. And the other thing is that things may not go down. I mean, look at SGMS, for example. Like, I think it's going to go lower, but look how long that thing has gone sideways for. So that's the other thing that I've been kind of looking at. And even I think AI, well, it's not really the best example, but even things that are going to keep going lower, they can go sideways for a very long time before they really do something else. So that's kind of one of the hard things about the market, is trying to say, okay, I could pick any stock in the world, but I need it to move. So how do I find something that's actually going to move? And you don't really know that until you get into it. So we will have to take that one step at a time. And what would be interesting is, I love on demand, which is the DVR on Thinkorswim. It's basically a DVR of the stock market. I don't think you can go back far enough, but maybe what you should do is maybe look at 2015. But I was going to say, if you could look back at 2008 when the market was going down, or anywhere else, if you could find historical charts, look at 2008 when the market was going down, and then start looking through tickers. See how many tickers were going down versus how many were going up during that time. And yeah, see what there can do. Now, during a full-blown recession and the market going down, yeah, that's probably going to be the easier thing, is to trade to the downside. But, Short side's a little crazy. And watch out for those bear market rallies. They're the biggest you'll ever see. All right, so I'm going to be pretty much, looks like I've answered most of the questions that I could see. And I think we're going to be leaving it at that because I wanted to make sure that we kind of got everything concise for you guys. Oh, 2 minutes. Let me see if I get down to, you guys wanted to look at some day trading. Problem is I'd have to find something just off the top of my head to figure out. The only thing I could see maybe recently for the S&P, and if you guys have a ticker that you could think of for day trading that would work, what right here, part of my rule is price getting rejected by the underside of a moving average. And it did that exactly on the 5-minute right there. And you could also see that the Moxie indicator was below 0. So that was a good sign of a short trade right there. And then also as, let's say, some negative divergence, you could see here that price went higher, but notice that the Moxie indicator went lower. So that was some negative divergence. And then even in through here, I'm just kind of pulling these things out as I kind of see them to apply them. Notice that the Moxie indicator here on the 2-minute kept going higher, but notice that the Moxie indicator was negatively diverging to the downside. Basically, that was telling you like, hey, price keeps going up, but the Moxie indicator is going down, down, down. That should tell you that energy is starting to kind of come out of this, and be careful that it's probably going to reverse at some point. Let me see if there are any other kind of things that I can point out for what I'm looking at. Let's see if there's day trades in NVIDIA. Let me see where I can find something for you. Okay, well here is price lower. Here's the Moxie indicator higher. And then you can see right as the Moxie indicator crossed over 0 is the same time that price crossed over the 5-minute 50 and there was a move up. So there's one. And let me see if I can correlate that to the 2-minute. See if there was something right there. Okay, here you go. So right here on the 2-minute, here is price lower. Here's the Moxie indicator higher. And then here's where price got over and the Moxie indicator fired. Now you could even say, again, so my rules apply to the lower time frames too. So here's your 50, call it the 250. So if you didn't catch it right there, you could have then caught it right there as price flagged sideways into the 50. The 8 stayed over the 21, the Moxie indicator stayed over 0, and it flagged exactly into the 50 and then continued up. So that would have been a good trade right there. And let's see, what else can we look at? Yeah, okay, so here's a good one. Right here, NVIDIA. So again, price double bottom. Notice that there's positive divergence. And then leading into that, you could see that price was going lower. Notice that the Moxie indicator was going higher. There's your positive divergence. In fact, that was the exact opposite of what I just showed on the S&P when it was too high. So there's that one. And then here's a 50, 250, right? Here's the 50, 250, and that one failed. So that's why for the larger time frames of stocks that I'm talking about with the 50, 250, they may not always be bullish, but at least you can say, don't enter at the 200 and wait to see if price pulls back to the 50 and if it's going to hold, and you can see it did not hold. So you get out. And that is the thing that I'm concerned about with the current situation. Like, will the NASDAQ, because it's doing a 50, 250 on the daily, will it be bullish or will it be bearish? We don't quite know yet. All right. AFD, the Moxie, I think you guys, yeah, I did not, so I specifically did not have them program the Moxie price trigger on the lower time frames simply because they would just be pinging you all over the place. I mean, look at how often the Moxie indicator crosses above and below. It would just get really, really crazy. So I think for those who care about day trading, they're going to be zoomed in, they're going to be looking at this, and they're going to be looking at it a little bit differently than that. So that's why I did that. Okay, here's another one. So you're looking at price on NVIDIA on the 2-minute, looking at price moving up. Well, what do you got? Here's price going higher. Here's the Moxie indicator going lower. There's your first sign that negative divergence is building. And then you get a double top, and here's the Moxie indicator at 0, basically rolling over. And then you could see right here, price confirmed the downside because it hit the underside of a downtrending 2-minute 50 with the Moxie indicator below 0. So yeah, there you go. Yeah, I think that's, hopefully that kind of just gives you, I was really just spitballing on that, but you know, hopefully it shows you that I could just even pull this stuff out of thin air and show you that it still works and that it's very interesting and how that works. Let me show you even one more. I'm seeing like price went lower, Moxie indicator went higher, and then it reversed for the moment. Yeah. And then even through here, price lower, Moxie indicator higher, cross the 50, Moxie indicator fired right there, and there's your move. So yeah, it works. You know, just apply all the same rules to the lower time frames, and you've got it. The moving averages, I use the 8 and 21 EMA and the 50 and 200 SMA. Lorna, you were on it. Gosh, it's so good having you guys help out with the questions and all that stuff. Yeah, Lorna, thank you. Actually, Lorna, it's the 10 moving average on the monthly. 10 MA on the monthly. Okay, well, I'm going to be wrapping up there. It looks like we got pretty much everything. David, thank you. Appreciate it. I'm glad you guys enjoyed it. And yeah, hang on to your hats for this wild roller coaster. This market has been all over the place. Remember, bear market rallies are some of the biggest rallies you will see, which is exactly what happened over the last 11 days. The market went straight up. And once all that short covering kind of gets exhausted, I don't think that there are going to be real buyers. And so I think that the market's going to have a pretty stiff pullback. And once it pulls back, we're going to have to reassess and see where it's going to go from there, whether it's bullish or bearish. So we don't have a clear, concise answer, but what I can tell you is I don't think the market is fully repaired yet. I think even if the S&P does go higher after the pullback, I'd be really concerned. I just don't think we're fixed. I just don't think the market is really ready to start the next bull trend. Breaking out from new highs could definitely be wrong. We're going to have to wait until we actually see that at the time, but it's kind of my feeling of where things are. So cool, guys. Well, thanks again. Looks like it's about time for dinner. So you guys go have some happy hour and some dinner, and I'll see you in the trading room and anything else. And take care. Thanks again, guys.